Hey, folks, welcome back to Money and Politics. It's been a while since I've had a chance to come to you and catch up, and there's been some news, certainly some good news on a variety of fronts, and we want to be talking about that today. So we'll get to it here just momentarily. I had a call right as I was doing a show yesterday, or preparing to do a show, putting together some of the information. And I got a call from someone, and long story short, I bring it up because this has only happened like about two or three times in my life. It was such an interesting call. We talked about a variety of things. That the phone call lasted 7 hours from someone who I didn't know before the call, who was calling me from Washington, D.C. Fascinating, talking about money and politics, exactly what the show is about. So today, for in Humbl land, and we're going to be talking about things besides Humbl, but in Humbl land, we started off with a very good story, and we had a major jump today, jumping almost 25%, close to 7 cents to bring us back up to 35 cents, and on very heavy volume of 16 million. Looks like 624,000, which is roughly twice the normal for the average over the last 10 days or so. And that was because we had an upgrade on the OTC of Humbl, which Humbl has been working toward for some time. I thought it was already going to happen before now. I thought it was going to happen maybe back in December, but here we are on the 13th of January. And this is, again, let me just back up and say, because I didn't do stories the other day, I didn't do a story on Monday because I just felt there wasn't anything new. The market wasn't doing anything per se in general, and I just didn't want to blather on about nothing. So today we got some news, and this is the kind of thing that I wanted to point out that, as I have said before, while we are waiting for the revenues, which are going to be the story on Humbl this year, the predominant story, not necessarily the only story, when we're waiting for the revenues to come in for the fourth quarter, and again, I'll repeat myself, this will be the very first quarter in the history of the company of Humbl, that we will have had a full month where they had the opportunity to generate money off of a variety of lines, the tickets on the app, the NFT gallery, and some of the others they've had out there, the ETXs and stuff. But this is what we'll be looking for, and that's what's going to move this stock at 35 cents. And let me just bring that back up here again. At 35 cents, we don't have a long way to go. In fact, I was telling the fellow I was talking to last night, I brought up that he might want to look at Humbl. Then it was 28 cents. I go, the risk is 28 cents. Yeah. And I said the upside is tremendous. And that's still true. So that's what we're looking at, folks. We're looking at the ability of Humbl over time, as we have been talking about now for a year, to go up and have the potential to have a great, great story. Now, you may have seen on Twitter, I think it was yesterday, there was a picture where Brian Foote, CEO of Humbl, has brought together his team, his top level team, and had them for a meeting that's going on for 3 days. I think that is a very good thing to do as a manager, to get the team back together and say, let's make sure we're all on the same page here. Let Brian talk to each of his people in a concerted meeting, where everyone can put in their own 2 cents, and say, where are you on tickets? Where are you on EXTs, etc.? And go on down the line. Where are we on developing the app and adding new features? And everyone then on the top level team can hear that. And that helps to make sure that everyone is rowing the boat in the same direction. That's true of any business. So I think that's a good idea, and that's what they're working on. So we're going to be waiting for the revenues. But as we had today, with the big news that we are getting this development and bringing up the OTC to a level, now we would go from here to the NASDAQ once we get the share price up. And that's what will make a big difference. But anything can come out in the short run, as we saw today, and that will move the stock. So this is really, I know everyone is understandably, since the stock went down for over the last year, we hit the high back in February of last year, so 11 months ago. But now we're at a point where, as low as the stock is, it seems to me that the upside is so much greater than the downside for obvious reasons. Now, that said, I was going to talk to you yesterday about INMD, and this is a story that you should be paying attention to, and I want to go over some of the numbers. So here we have INMD's close today down $3, which is down 5.6%. And it's down from about November, go to a 6-month chart here, the high of about November, what was that, 1st or so, when INMD was at about close to $100 at $97. And this is an example, folks, where, oh my God, don't you feel bad that it's down 50%? No, I actually don't. Because I'm not holding it to go to $100. I'm holding it to be a $500 stock. And that's going to take some time. And along the road, there's going to be ups and downs. I just know that going in. The other thing is, this is a great, I think, buying opportunity. And, folks, I'd rather buy low than high. Now, let us say that it got ahead of itself a bit. That's fine. There was an article that came out today on Yahoo News, and that was... actually, it was, I think, that some of the big money, now I've lost sight of it, but it was that the big money is pulling out, some of the big money is pulling out. Here it is. Big money dumps INMD. So that was actually 2 days ago. And I read the article, and it basically went along with my own thinking on this. And at the end of the article, the author gives the bottom line, and he says, the bottom line is this: the INMD decline makes the stock look oversold. Big money selling in the shares is signaling to take notice. Given the historical gains in share price and the strong fundamentals of INMD, this stock could be a huge value play long-term and still worth a spot in a growth-oriented portfolio. This stock could be a huge value play long-term, and that is my position, that this is a long-term gain value play. And why? Because I think it was yesterday, it came out with the preliminary fourth quarter earnings, fourth quarter on this ending December 31. And then the fourth quarter, they had record revenues for the fourth quarter in the range of $110 million for the full year of 2021. So that was the fourth quarter, $210 million. For the full year, their revenues they think are going to come in right around $357 million, higher than previously announced guidance. I was telling you it was going to be about $350 million. So $356, $357 million. We had record earnings per share in the fourth quarter and full year of 2021 in the range of 61, 62 cents on per share and $2 to $2.03 earnings respectively. The gross margin for the full year of 2021 is in the, let's call it 85% range. That's great. And the full year revenues for this year, 2022, so they're saying they think at this time, by the end of 2022, they think the earnings for INMD will be $425 million. I'm going to tell you, InMode has a habit of being conservative. And almost every quarter they have, when they've said we think we're going to make so much money for the quarter or so much more money for the year, they underestimate. I think if they're telling us that for 2022, they're going to have revenues in the area of 425 million, I am going to say I bet they're going to come in closer to 500 million. That they're going to probably come in the area of 475 million to 500 million. That would be my guess based upon their growth rate that they've been having. And obviously a full acceptance of the marketplace for them to have the growth as they have been having. Let me remind you here, as we are looking at these numbers, and let's go to the last part of the first bullet here. So their revenues are for the full year going to come in around 300. It's the middle line, $357 million. Now, folks, I wanted to bring up that, and it's right up here where it says 357 million. Last year, December 2020, they ended the year with their gross revenues as being 206 million. So now they're going to go from, they're telling us, $206 million to $357 million. That's $150 million additional revenue on top of what they did last year. $157 million of $206 million is, well, 50% would be 103. So they're doing 157. So they're doing something like 60% growth. And if they had 60% growth on this 357, that'd be another 175 million, which would bring it to 525 million. Okay, so if they have the same growth this year as they had from 2020 to 2021, if they had that same level of growth from 21 to 22, they would end the year at about 525 million. So when I'm saying 500 million or 475 to 500 million, it is not out of line. And when we have this article here, Big Money Dumps InMode, this is, in my estimation, a perfect example of the so-called smart money being the dumb money. And it says here in the article, and you can find this on Yahoo, it's written by Lucas Downey, and FX Empire is the, I guess, the name of the publication. Fund managers are always looking to bet on the next outlier stocks, the best in class. They spend countless hours looking up companies, reading reports, etc. When they find a company firing on all cylinders, they pounce in a big way. Big money sells too, especially in situations. So what that didn't tell you a whole lot, I don't think. But I think what I would say is, and this is an important point, when you're looking at what the big money and why is it going down, it has been my experience over the years that a lot of times the big money is not smart money because they are trying to beat the other guy in the quarter. Money Magazine and these financial publications are going to come out and they're going to be saying, who had the best mutual fund? Who's the money manager with the mostest? So these guys are going to either be trying to push for the quarter because they're going to get a bonus or they want to get a write-up. They're not investing with the same concept that you and I are. They want to get those under-year bonuses and things. So when the selling was being done from the beginning of November down, that's where you could see a lot of these guys might have been selling to lock in their gains so they would have a great year and get that $1 million or $2 million or $3 million bonus or whatever. We are buying for 3 to 5 years because this is INMD, a company that is going to continue to grow. I think if you have INMD here, you're not going to be sorry. I think when we look at Humbl, could it go down tomorrow? Of course it can go down tomorrow. But Humbl obviously still has the great potential to explode upwards. And when now we're not doing what we did in 2021 with Humbl. We're not doing what we did over the last year, where we kept waiting for them to, get our own ticker symbol, to get this line of business to come out, to get that line of business to come out. Remember that a year ago, if we go back to January 13th of 2021, heck, the SPAC where they had joined with Tesoro Enterprises, a flooring company, was only like a month old. So 2022 is going to be a really different year. Don't be looking at Humbl in 2022, looking as we look forward into the future with the glasses on that you're wearing and the viewpoint of last year. It's going to be a different company. We're going to be looking at revenues. We're going to be looking at possible new acquisitions. We hopefully get that stock price up, not just for us to feel good, but because we want Brian Foote to have a currency that he can go out and buy another ticket company or whatever that he looks to buy to advance the company. And we want him to have a better currency than what he has had. Okay, I'm going a little longer today. I'll try to wrap this up here shortly because I missed the first 2 days or last 2 days rather. The one other thing I had, actually my nephew call and we talked, did I still like DIG? Did I still like the oils? And I would say, yes, I still like the oils. And the reason is, because the oil, we haven't reopened the economy worldwide as much as I thought. And so I hope that we're going to reopen the global economy more in 2022 than what we have already. The cruise lines are still not going out like they were. A lot of people are not traveling like they were. We have, lockdowns all over different places around the world. So I think we're going to be using more oil over the course of the next year. I think we still have the Biden administration, which is an enemy of fossil fuels, putting the kibosh on a lot of policies that would advance the production of more oil. The production of more oil would bring the price down. But since we're not doing those things, we're still probably going to have a constricted supply. Saudi Arabia, as far as we see, is not going to be bailing out the United States by producing more oil. And so what we could see as we go forward this year, I hope that doesn't happen, is also other problems on the international front, whether Russia goes into Ukraine, whether China screws something up by going into Taiwan, which would be hugely bad news. Both of those could be a driver of the price of oil. That would be horrible for the stock market, but it could be something that would be a big boost in oil. Lastly, I published this a while back, I think in December. It was a list of some of the ETFs that we're going to be splitting 2 for 1. And 2 of the ones that are on the chart and which I have consistently said you should be taking a look at. And that is the TQQ and the UPRO. And the TQQ, let's take a look at that now. Yesterday it was at like $150, so here it is just under $71. Yahoo Finance did not reset its data, so if you got a news flash from them saying that TQQ and UPRO had hit an all-time our 52-week low, that was not accurate. It's because they split 2 for 1. And I got both of those flashes. It's 52-week low. Well, no, it's not. Okay, so there that is. And do I think you should keep this for now? Yes. But again, as we make money in any position, you want to here and there take a little money and build up your cash reserve, especially if you don't have a cash reserve or your cash reserve is pretty low. So as you go forward into 22, as we go forward into 22, it is certainly possible that we could have a market sell-off because of some international event taking place, as I just said, or something else. We've had a great run for a long number of years here. Last year was the best year of the S&P 500 ever. And so it wouldn't surprise me if we had a market sell-off that went down 20% or more. Let's say 20%, 10% to 20%. Let's say that. And if that happens, the TQQ and the UPRO, which let's bring that up. The TQQ and the UPRO would both take a real hit and go down precipitously because these go up 3 times faster and they go down 3 times faster. And you can see here a Zach article, the best leveraged S&P ETFs for the first quarter of 2022. So there you go. The people that are telling me, you shouldn't tell people to buy these things. Well, there's Zach's, okay? Zach's publishes an article now. I was telling you all last year that this is something you should be doing. So that's it, folks. I mean, I could go on. And hey, you know what? Yesterday, I spoke for, as I said, 7 hours. So wouldn't that be something? Can you imagine if we did a live broadcast taking calls and I went for 7 hours? I won't do that to you. In fact, at one point, I had to get up and go, I can't talk anymore. I need to get some water. Anyway, it's always fun to talk about this stuff. And again, as always, if you want to send me an email, there's at least one reader I need to give him an answer. And I was going to do a video, and I just got backed up for a couple of reasons, some personal, some business. And so I wasn't able to come to you as I had wanted to. But good news today, as we say, on Humbl. And we could use it because I know emotionally, as I said, the big thing, it's always hard to hang on when your stock consistently goes down. And it's been going down certainly for a long time. But hopefully we're going to get some up days. And boy, doesn't that make you feel good. So thanks as always, folks. Give me your thoughts on what you think about the future of Humbl. Give me your thoughts. Tell me if you've bought some INMD. I would highly encourage having that in your portfolio for, I would say, a 5-year hold. And I wouldn't change my mind on that unless the story really changed. But for now, I don't see the story changing. As I gave you the numbers, they're still growing at a rapid pace with profit margins that would make you think you're talking about a drug dealer. I mean, these are unbelievable profit margins that they are reporting in addition to revenues. So for that, I'll say good night. Have a good night. And I hope, I don't know, do you like to get, let me ask you this. Do you like to get a report on Friday? Because a lot of times I think people are going out to the bars or the movies or a restaurant. So maybe if I put some out on Friday, maybe it's, you're not going to watch it, or maybe you watch it over the weekend. Tell me if you still want a Friday report. And TGIF in the morning. So another reason to be feeling good. Hopefully we have another update. We'll see you then, and I'll keep you informed. Don't forget, I do update things throughout the day as news warrants on Twitter, so you can follow me on that. Thanks, folks. Take care, and we'll see you very soon.